Hey everybody, let's go through the charts for this week, the EURUSD day trading strategies. And I really want to focus on understanding the price action more than looking at specific entries. So on the 31st, still putting entry points. And then for the last 4 days of the week, I just drew in the chart patterns for you and just things to look at. And I really want to focus on price action because if you start to understand the price action, then you're not just blindly trading a pattern. You're actually understanding why the patterns might work and why they might not in certain contexts, which is really what we're after if we want to become traders, is to understand what we're doing and why. And over time, we can then develop better decisions, and we'll talk about that as well, what we can do to start developing situations. There was a really nice case on Friday of an interesting pattern where you can ask yourself, is this the best way to trade this, just the normal way, or is this a little bit different, so I should actually go back and see how this little bit of a variation has performed, and then I can decide how I'm going to trade it after having more data. So we're going to go through that in this video. We'll go through January 31st. Pretty clean one here. High, pullback, moves to just a slightly higher high or almost about equal. Nice shift down. And we drop below this swing low. We have a couple bars of consolidation. Quite often we're waiting for a little bit more of a pullback, but this was a nice little false breakout. There's a little tiny candle there. The price pops up from it and then drops below. That's a good signal to get in. And this one was a brutal one. I saw lots of people end up taking 2-3 trades on this one. And yeah, it was ugly. But at the same time, the price, we kind of have to keep taking this. The price action is not indicating any strong buying. We had to move up, drop, move to a new high, drop to a new swing low. And this is very tentative price action. Yes, it's a little bit choppy to the upside. And if you were a little quick on the trigger, might have got in here. Might have even got into one there. And yeah, it's just kind of grinding its way up. Let me reduce my camera here so we can see the whole chart. And yeah, it's just kind of grinding its way up. And so if you got caught in there a couple times, that's pretty normal. That's going to happen. Nothing to worry about. And then we do have this, finally, a little bit bigger breakout. Now, after taking 2 losses in a row, so if you got into this winner, good. You have 2 losses, maybe 3 losses, you're still up. But usually once I have 3 losses in a row, or 2 losses in a row, I will scale back my position size, because if I lose 3 in a row, I usually call it a day. I've either kind of messed something up or the market action wasn't quite right. So whether you won this one or not, typically after 2 losses in a row, I would scale back just so that my day's not done, right? Because if I'm risking, let's put it in dollar figures. Let's say you're allowed to lose $300 a day. So each trade, you're risking $100. If you hit your stop loss, you lose the 100. Oh, you do it again. Oh, now you're down 200. Instead of risking $100 again and ending your day potentially if you get stopped out, you can just reduce it by half. This way you have 2 more trades to go, right? If you get stopped out on the next 2, now you're down 300 and you've lost 4 trades in a row. So in this case, I wasn't trading this day. I very likely would have dropped my position size. And that means I would have taken a half position, whatever these were, I would have dropped it by half. And that way if I lose, I'm only down, let's forget this winner over on the side here. If you lost the 2 and then you lose this one, you're only down 2.5 R on those trades. You still have another half R trade that you can risk. And so that just allows you to stay in the game a little bit. And if you do find that you hit those 3 R days quite often, it's okay to scale back your position size during the day just to give yourself a little bit of room. So once this is profitable again, then just go back to your normal position size. So this one, yeah, it grazed the target, probably wouldn't have filled it. So that was your cue. Like if it basically touches it and doesn't fill you, you can just close out the trade right then. Or kind of worst case, you'd be putting your stop loss above these candles here. So I put it as you would have probably made at least 1.2R, 0.6R. Yeah, so I said you would have made at least 1.2R, but since you're using a half position size, that equals to 0.6R. So you still make a little bit. Yeah, not as much as usual or as much as you could have made if you had the full position size, but that's not the point. The point is that if this would have gone another little tick up, we would have been stopped out again, but we could still live to trade, take another trade. Pretty clean pattern coming out of here. A little chop at the bottom, nice shift up. A little pullback, tiny, tiny candle, nice run up. So let's go into February. This was a really nice shift up. Choppy, choppy, choppy. And let's note this. Look at how the price action is while you start trading. It can be a good example or a good exercise just to see what the price action's like. So if you look at this, and we can see there's not a lot of big price waves. The price kind of moving maybe 2-3 pips and then pulling back, 2-3 pips pulling back, 2-3 pips pulling back. Tiny bit more movement here, but really not much. Moving a few pips, pulling back. Here we have our first kind of bigger shift up, but we still want to have in our heads this idea that the price is a little bit wiggly today and doesn't really have a lot of oomph. So we are in an uptrend. Is a double pump a good strategy to take? So a double pump is we are taking near the bottom of a little price range. And if you look at this, this is a downward trend channel. And whether it's sideways or going this way, where would we want to be going short during this choppy? We would ideally want to be going short near the top, right? Like once the price bounces up and then makes it shift lower, right? Like entry points like this or this. And I'm not saying we'd actually trade these, but just to give yourself a bit of a look at how the price is moving. And so a double pump is actually, in choppy conditions, not a bad trade to take because we're taking a trade near the bottom of the chop. So if the price does move up, we are in an uptrend, so even if it has a little bit of oomph, which it did, and starts chopping sideways again, we're not in a ton of danger. Yeah, it might not hit our profit target. In this case, it did. Took quite a while. Moved the stop loss up because, no reason to give it all back. We know the price action's choppy already. And, I think I noted, on my broker, it went quite a bit past. But this one on FXCM, the data feed you use on TradingView, it looked like it just touched, but on mine it went a little bit further up. But just notice that overall context, that you can take that into account while you're trading. And then, so I was thinking about that, taking this trade. Not a little bit choppier throughout the session. If it pops up, starts chopping around again, take your profit where you can. Not too much else happened here. No rounded top here because we had this move up. This is our pullback low. We have a move up to a new high, which is this is a bit of acceleration to pretty strong move up. And we'd have to drop back below this swing low to trigger anything. That doesn't happen for a long time. So we have this swing low, pulls back. So it kind of looks like it up here, but the whole pattern doesn't quite fit. February 2nd. This was an interesting one, and I saw it in hindsight, but we had this drop, this move up, drop pretty close back to the lows. And what was interesting to me is that we know that we are in an overall, we've had this shift down, so our bias is toward the downside, or we're leaning more towards short trades, not really thinking about any longs at the moment. And we don't have any rounded bottom because we accelerated right into this low. There's no slowing of this down move. It just went straight down, so that means no rounded bottom. And then we get this sideways movement, and there's like a little bit of a false breakout here. But remember, our bias is down. We're not too concerned about this little false breakout to the downside. What is interesting is this little false breakout to the upside. When we have this sideways movement, and then we have a little pop above it, and then we start dropping again. So that definitely more in an advanced trade, but it's that process of looking at a double pump or any of these patterns as where are people about to get screwed, basically. And we can see downtrend, so the likelihood of the price moving lower eventually is good. And where's the point where people get screwed? It's just kind of chopping around. That's the point where if it's going to go up, it's going to go up, and it doesn't. That causes the panic. This was a nice little rounded bottom here. A little bit choppy in here. It makes a little bit lower low. Pushes up. And I know a couple of people didn't take this. I was eyeballing this one. A couple of people said it was about a pip or 0.2 pips off this high. Yeah, I'm not... Sometimes I'll measure them out or I'll draw the line in. But, if it looks close, if we have that shift, I'm usually okay with that. But if the conditions aren't as good, then I'll be more conscious of actually measuring it out, making sure there's the shift. But I like this little tiny move down. Couldn't gain any traction, and especially after this pretty strong rally up, we have this hard drop, and then it just fizzles. Nowhere to go. Pops up, and a nice decent little candle there. This one also, lots of people took this, and that's also a valid entry, just waiting for that little bit bigger push up. That'd be a variation pattern at that point. And yeah, I got out of this one because I noticed this whipsaw action, and so I decided if it gets up there and starts pulling back, I'm just going to get out. So move the trailing stop below this candle, then below this candle, then below this candle. So it was stopped out right in this area here. Of course, it would have eventually hit, but same sort of thing, noticing the price action. I was thinking that if this started to drop, it was going to drop. And just based on this kind of choppy price action and these big red candles in here. So I was thinking, we're going to get another big red candle. It did not happen. Instead, we get barely any selling, this tiny green candle. So at that point, you can start thinking to yourself, like, is this... I was expecting a drop. If it started dropping, it didn't happen. Who's going to be running scared right now? And it's anyone who's short. And then we run right into a snapback pattern. So the snapback pattern, considering what I know, yes, I decided to get out of a trade earlier because it was a little bit choppy. Now we don't seem to have that anymore. Those big red candles have disappeared. We have a little pause here, and if we start moving up, that's a good potential snapback pattern. Not much in here. We're trading. We don't really have a rounded top or anything. We have a nice shift down, but yeah, it doesn't really fit our overall pattern. This was a very interesting day for a lot of people because I think it was the first time a lot of people had noticed really big volatility on a day. And you can see even the scale moved up to about 10 pips, and to keep it at 5, you would have had to zoom out and not be able to see some of the price action. So we have 10, 20, 30, 40, 50, 60, 70, about 80 pips in about, I don't know, what is that, 15 minutes, 10 minutes? That's more than double what most of us see during a typical 2-hour period in 10 minutes in one direction. So that is something that is a little bit hard to adjust to when it's your first time, or even it's been a long time since you've seen a lot of volatility. It can take time to adjust. Your position sizes are going to be probably half or maybe even less of what they normally are. You go from 2 pip stop losses up to 5, 6 pip stop losses might be okay. If the price is running, who cares? So someone asked, how do you know what's an okay stop loss in volatility? And I said measure out the price waves, because how the price is moving lets you know what kind of stop loss you can get away with. So as we talked about on some of the other charts, if the price is really grindy and not really moving much, it's only moving like 4 or 5 pips in a direction, you're only going to want to be taking trades that have 2 pip stop losses, maybe max 3 pips, because if it's only moving 5, 6 pips, it's going to be hard to hit your target. In this case, we're moving 80 pips, so having a 5 pip stop loss, a 6 pip stop loss, 2.5 times that, you're looking at about a 12 pip, 13, 14 pip target. Is that going to be reachable? It's a decision you'll have to make based on the volatility you can see, but probably you're okay with that if you're getting that much movement. So after a big run like this, the double pump was a possibility. So we have the move up, pullback, move up to the high, pullback. This does undercut it a fair bit. So let's talk about the decision process of deciding, am I going to take this as a double pump, or are we, since it undercut it quite a bit, is this actually a reversal? So in the course I talk about making that decision process. What are the two potential patterns in play here? We know we have big upward movement, but if it stalls out, that could be erased by a big drop, right? But it also could continue with potentially another big move up. So we have a possible rounded top, and it's not a great rounded top. We pretty much have equal highs there, but run up, pull back, move up to near the highs, and then a shift down. Or we can also view this as the double pump, which we talked about. So if you view this as a double pump, what is your first trigger? Is here going long on this candle. We've had the red, we move above it. If this were to be a if we trade it as a double pump and it turns into a rounded top, what is going to happen? You are going to have this candle trigger on the double pump, and we'll be entering our pullback. So we could take this as a double pump and say, if the price stalls out in this area and then shifts down, that would be our rounded top pattern. So we would get out of the double pump and into the rounded top. In this case, it does not happen, but it's important to understand that thinking process, because if you set up how you're going to trade and you've thought about the scenarios, then you don't really have to be afraid of trading or of taking a trade, because you trust your process. So if I got into this as a double pump and said, if it stalls out and turns lower, I'm getting out, it's almost like a kind of a no-risk trade, in the sense that if it goes up at all, I know that I'll be able to get out. So the only way I'd possibly lose on that double pump with that mentality is if it basically just edged here and then went straight down. In that case, it's going to hit my stop loss really quickly. Yes, I lose 1R. That's unfortunate. But then I could still be able to jump into the rounded bottom to the rounded top to potentially make it up. So that's one of those scenarios of, do I want to take this? Do I not take this? And if you're indecisive, a lot of times it's you can use a trailing stop loss. Just say, this is my first signal, I'm going to go with it, and I'm going to implement the trailing stop loss. And in this case, it would have worked out very well. Rounded top here. No short trigger though. We get the drop, and then we just keep going up. No rounded top here. We accelerated right into the high. Then we have a little bit drop. It takes a long time to get below this swing low. This is not the rounded top pattern we're looking for. I'm just pulling up something. See if I can find it on my Twitter profile. I posted a... Oh yeah, here it is. Just like some very clean, you know, what our kind of typical patterns are. And yeah, gives, you know, some ideas about little things about the strategy, of course, which most of you will know. But we can tell this is in no way really a clean pattern or a pattern we would be interested in trading. It does not fit our, you know, this is pretty much how they should look, and that looks nothing like it. So, you know, if it kind of doesn't pass the sniff test, especially when you're starting out. So I should talk about this too. I'm throwing a lot of information at you, and I do these videos, and I'm sort of relying on you to take what you need for the moment and then leave the rest for later. Because we need to learn how to trade the basic pattern before we can start trading little variations, or before we get really good at noticing the price action around the patterns. It's, you know, as you're starting out, just kind of focus on trading these simpler patterns. And I think that's a better approach than trying to absorb it all at once. And so if some of this seems a little over your head, let it be over your head for now. Just trade the basic pattern. Look for the kind of prettiest rounded tops, rounded bottoms you can see, and where there's no real conflict going on, and trade those. As you progress, there might be one of those a day. As you progress lately, as you progress, then there'll be little tiny variations where it's like, it's not quite perfect, but you'll have the confidence to trade it as you start looking at more of those variations and looking at the price action. So sort of increase how many patterns you trade and the look of the patterns as you gain more experience, and take on more as you're ready, but not before. I sometimes like these little squeezes. I just noted it. Actually, a couple people took them, so well done there. But yeah, just this kind of squeeze, and it's almost like a reverse, in this case, like a reverse double pump variation, right? Double pump variation would be, we're in a downtrend, the price moves up, we get our double pump, the price moves to the low and then breaks out. This one is just kind of getting squeezed up against these highs here. High, pull back, high, pull back, and then we get this consolidation there. Just something to look at if you want to potentially add another strategy. Again, don't add more strategies until you've mastered your first one or your first two. This was a very interesting day again. The non-farm payrolls came out, and definitely some big movement again. Big candles. And this would have been a rounded bottom variation. So we had these moves, move to a new low, pop up. It doesn't take out this swing high yet. So taking it long anywhere in here is not a valid pattern. We'd have to wait till it makes a new swing high above here. At this point it's and above here. At this point it's a variation pattern, a little bit weaker. But look at the movement we've had. Could you, this is probably a 5 pip stop. Is there the potential for the price to move 12 pips after this? 5, 10, that's up into this area here. That's actually not a lot of movement compared to what we've seen. We haven't even retraced most of this wave. We'd still almost be inside kind of the start of this rounded bottom pattern with this up here. We're just kind of getting to the top. So it wouldn't be a bad trade to take that one. It's a variation pattern. It's a big stop loss. Scarier to take for sure. But is it a good trade? Based on the price waves, pretty good. And especially we have, a series of swing highs, higher swing highs, higher swing lows. Like we can see this trend shifting. And, it's kind of almost just starting to accelerate. So a decent one. Some people took this one, a nice trade again. Big movement, not a perfect pattern like we say. It takes a little while, a bit of chop to finally break the lows here. Then when it does, some big candles, we're outside the pattern, so we are extended. But again, if you find a decent trigger in here, so this one you're probably looking at about a 4 pip stop loss. Entry below here. Stop loss up here. And 4 pips, you're looking at about a 10 pip move. Is 10 pips hard to move in this environment? No, we just moved, 10 pips, 12 pips pretty easily. So from here, 5, 10 down. Yeah, based on just what we can see already. Not looking at what happens after the entry point, because we won't know that in real time. But we can see the price, pretty strong movements. And we've had this big run up. If we start reversing back down, yeah, a lot of these people who bought in here are going to start getting scared. 10 pips in this situation, not a huge amount. So a little bit bigger stop loss. Being okay with the rounded top variation being extended, that's the decision you have to make. Am I okay with taking that trade given the context? So note the move, big long waves. That gives us more leeway to take trades because the price is running. Like we talked about on another day, if the price is not running, you're going to want to be implementing more of the aggressive trailing stop loss method, maybe looking to take your profits if it gets close to the target and then starts pulling away, just close it out. But if you have price that's really running, that's going to change how you approach those trades. Let the price run. Take trades where you're taking advantage of the price running. Not much in here. I would not view this as a double pump. This is way too much difference, I think. You're almost starting to think, like, was this a reversal back up? Luckily, there was nothing in here to kind of start moving back up to make, start second-guessing yourself or anything. It just keeps dropping. This was a pretty strong drop, but not compared to this. This was a really big drop. So this is actually slowing down a bit. And then we have this reversal up. So a couple people did take some in here. I noted that it was a little bit weird that we have this long of a consolidation. So if you took the trade right there, expecting a little pause and then a continued pop, that's good. Once we get this bigger consolidation and then it drops away, that kind of got me thinking, how have I ever looked at that scenario? And I haven't looked at it specifically. What happens when the price pauses near the top and then pulls back? So this was quite a long consolidation. 1, 2, 3, 4, 5. About 6 bars before it really accelerates off to the downside. And, kind of after that long, if this was going to reverse, you'd think, we'll probably go up, or maybe we have a little false breakout and then a move up. Pretty weird that we just have this big drop instead. So I was thinking maybe hold off. Again, I wasn't trading, but this would be my thought process. Like, let's just see if this stalls out a little bit. But either way, if you took this one and this one, those were actually pretty good trades. By the time we get back down to the bottom, we have nullified that rounded bottom pattern. We have another potential one here, a little one. Drop, pop, drop. We move to a new swing high. But by the time it gets up here into this area, I already know it's too extended. It's gone. If it pulls back all the way back here, that's, it's almost telling us that the selling might have kicked back in again. It's too far gone out of the pattern. There was this really big one. Drop to a new low. New swing high way above here. So again, a little more a scarier thing to trade. I'm not sure if anyone took this one. But on this type of big pattern, yes, I would have ended up missing the trade. But I would have wanted to see something that tells me this pullback's ended, because it's so far extended that, you know, I'd want to see maybe a little bit of selling, a push up, and then maybe another drop that barely gets anywhere. Start to see that fizzling down of the sellers, just because I thought there'd be a little bit more selling, and it didn't come in. But so if anyone took this big pattern, because of the context, we are in a running environment, so it does provide you a little bit more leeway to take some trades. If you got into that one, good on you. It was a big pattern. Sometimes those are scarier to get into. This, super clean. Entry here, short. And another one, drop, pop, drop to a new low, pushes above the swing high here. No real great trigger candles, but again, even if you took a bigger trigger candle here and went long up here, you still would have been okay, because the price is still running today. So you may have had to get out when it started chopping around or something, or put a stop loss below here, but you still would have been okay because of the overall context of the day. I wanted to point out, not a snapback. You're looking at too big of a cup here. This taken way too long to get back up here. You've had lots like chopping around in here to get back up to this high. So just because it consolidated near this high, not a snapback. You want those snapbacks to be a move up, drop, right back up, pause. You know, they should be fairly quick patterns, not huge saucer-shaped things. So let's talk about this for a second. Going back to this, so what you can do is you can just go through, like, let's say you're wondering, how does this affect the pattern? So you can go back through your prior charts. Hopefully you've screenshotted them all. It makes it a lot easier. And you can just say, should I be getting in to a trade right near the prior high? So this one doesn't really pull back. There's basically one candle, two candles, and then if you took that entry, is that a good entry? So I know sometimes it is, and you'd want to go back through your charts and say, is there a way to incrementally make that a little bit better? If I waited on all those trades, yes, I might miss a couple, but I also might eliminate 10 losers. So I made 2.5R on the one trade that I bought on this candle, but I've lost 10R taking these trades. And now you have some real data from the last month, and then go back maybe another month and you find the same thing, and you realize, I maybe shouldn't be buying when there hasn't been a pullback. And I'm not saying that's the case. I'm saying you have to go through your trades, and that's one way that you can start to see some improvement, is just by looking at these tiny variations, how you're entering these trades. And that's why I left entries off for these last few days, and I'll leave them off probably for all this month, because I want to take the focus off how I enter trades and put the focus on how you enter trades and how you can improve your entries. And it forces you to then look at how you're entering your trades and what happens after that entry, and then you can decide by going through your charts if there's little tweaks you can make to that. And I think that's the only way. That's how I learned, and I think it's the only way to learn, is to focus on your own sort of chart. So I want to focus on the big patterns, the price action this month, and then I want you to, of course, focus on the price action too, but also really start thinking about your entries in relation to that price action and how you could start improving those entries. So that was a pretty long video. I will stop it there. Have a great weekend and happy trading.